Hello and welcome. Thank you for joining today's webinar, Buffalo Niagara Business Incentives. My name is Sarah Larson. I'm the Marketing Manager here at Invest Buffalo Niagara, the Buffalo Niagara Region's Economic Development Organization, and host of this and past webinars on economic development topics worth diving deeper into. And with that, my job is to find the right experts. So joining me are three presenters today. First, business expansion expert Lori Inator from our MDN offices. Lori focuses on national companies and business services sectors that are considering an expansion. Lori's services are free of charge to any business interested in expanding to the Buffalo Niagara region. And our guest presenters today are Corey Van Duzen and Kristen Ray, both certified public accountants with Lumsden McCormick, one of many partners we often work with here at Invest Buffalo Niagara when a company is interested in expanding to the region. Corey has 15 plus years experience with a focus on business development incentives. And Kristen has been with Lumsden for a few years now, also primarily works with commercial entities focused on various federal, state, and local business development incentives. I really have brought in the dream team today for this topic on business incentives. Lori, Corey, and Kristen will walk you through opportunities available here in Buffalo Niagara, help you understand eligibility and the application process. And after that, if you still have questions, we'll be here to answer them. So before we begin, just a little bit of housekeeping. If you do have questions during the presentation, please type them into your GoToWebinar control panel. Following this presentation, you'll receive an email with our latest business incentives guide. I will provide you our contact information, this presentation, and a link to our website with additional expansion tools, if that's something you're considering. So now without further ado, I'm going to start the presentation with Lori to get us started.
Thank you, Sarah, and thank you to all who joined us today. This webinar is to cover incentives that would benefit advanced business services, which is just basically an umbrella term that we use to cover various types of businesses that are office centered. So these include businesses in the financial services sector, insurance industry, information technology, and innovative technology companies, which is just a few examples. It's a very broad category. But fortunately, there are incentive programs that can be beneficial to this variety of industry. During this webinar, we will be covering two very important but vastly different programs offered by New York State. The first being the Excelsior Jobs program, and then the other being the Startup New York program. We will then go over two hypothetical situations where we provide examples of how each of the programs can be beneficial to various types of companies. There is also a federal program that we will cover, and that is the Work Opportunity Tax Credit. So I think you'd rather listen to the experts than me, so I'll pass over the presentation to Corey and Kristen, who are definitely experts in these programs.
Thank you, and thank you for everybody listening today. Hopefully we get some good questions at the end. We'd be happy to answer anything. But the first program that we're going to discuss today would be the Excelsior Jobs program, which is a New York State tax credit incentive program that goes after targeted businesses to try and draw them to New York State, or try and have New York State, or encourage New York State businesses in these areas to expand and hire and invest within New York State. So the first thing that we did was, based on the program today, we listed out the definitions of some of the targeted businesses that we thought might be interested in this program. And you can see on the slide here, two of the three that we were going to go over today would be back office operations, financial service data centers, or financial service customer back office operations. And what I like to do here is, if a client or a prospect that's looking at Buffalo thinks they might be eligible for the Excelsior Jobs program, a lot of times I copy and paste this definition and provide it to the client, and then go over it with them, and we talk about how they might be able to fit in the definition, because usually They know their business better than I do. And a lot of times I'm just starting to talk to them. So the third area that the third targeted industry that we're looking at is software development. So kind of think tech, if you're building an app or building software, this is an area that New York State wants to foster growth in. And I think you've seen a lot of dramatic growth in software development and tech in the Western New York area over the last 5 to 10 years. Some exciting stuff. So I think it is definitely working. So if you are one of those targeted businesses that we're talking about today, and you apply for the Excelsior Jobs program, why would you want to apply for it? Well, there are 4 different tax credits within Excelsior Jobs program, and we've highlighted 2 here in yellow that we see the most bang for their buck for the types of businesses that we're talking about today. The first is the jobs tax credit, which is 6.85% of new jobs added under the project. So if you're a new company coming to Buffalo, pretty much every single job that you hire would qualify as a net new job. If you're an existing business, and let's say you're a software developer and you have 10 employees and you commit to hire 10 more, then the additional 10 over your base would count towards a net new job. There's an investment tax credit, which is basically your depreciable property multiplied by 2%. That is not used as much as some of the other credits. It's usually the wage tax credit, and then the R&D tax credit, which is just an add-on to the federal, and we can talk about that more later. And then the real property tax credit, I've actually never seen that awarded to a project. It's a lot harder to be eligible for. And one comment here is one of the targeted businesses that we talked about was software development. A lot of times with software development, it might take 2 years or more to develop the product or the software or the app. So you might say, well, why do I want a tax credit if I'm not paying any tax? Well, you might not get any benefit for it. Well, these are fully refundable tax credits. So that means even if your New York State tax liability is 0 because you're in development phase and you're losing money, you get a check from the government equal to whatever that tax credit award is. So the way into this program is promising to create jobs. So here we have a nice graphic that shows all of the targeted industries within the Excelsior Jobs program within New York State. And we have big yellow pointers that show the 3 areas that we're talking about today. Software development, you have to commit to create at least 5 jobs over a 5-year period to enter into the program and then trigger the benefits after you hire that 5th person. Financial services and back office, they are actually both 25 jobs. So usually these projects by nature are more employee intensive, and you have to commit to hiring at least 25 people over a 5-year period to trigger those benefits.
Corey, just a really quick question. This may come up. So for software development category, the jobs created have to be within the developer positions. Is that correct? Or can it just be any jobs within the company?
Great question. For all of these industries, what I tell clients is you want to make the argument that at least half the jobs are in that area. So you can have management positions and other positions count towards the 5 jobs created. And on the back end, when you submit your application for the credit, once you create your jobs, it is important to make sure that you have the right designations on your employees, because New York State will examine the data before awarding you the tax credit.
So another portion of the Excelsior Jobs program is the research and development tax credit, which is also refundable through New York State up to 50% of the federal research and development credit. For those of you that aren't as familiar with what the R&D credit is, there is a federal research and development tax credit available, and depending on what stage you are in your business life cycle, whether you're a startup company, this credit can be refundable through a payroll tax credit. And it's also used to offset federal tax liability, if that's the stage that you're at, as well as the AMT tax. In order to be qualified for these activities, there is what's called a 4-part test. So if your activities are meeting this 4-part test, then you may be eligible for this federal research and development tax credit. So this 4-part test is comprised of technical uncertainty, process of experimentation, technological in nature, and qualified purpose. So with technical uncertainty, the activity that you're performing is being performed to eliminate some type of technical uncertainty, whether that be if I use a different material, this is going to create a more efficient product, or in terms of software development, which is where this is very common. If you're doing a different type of coding so that you can develop a different type of app or a different feature for that application that you already have, even if it's improving an app that you already have and just adding additional features. Process of experimentation. This is essentially the scientific process. So you have a hypothesis. You need to conduct a series of tests in order to prove that hypothesis right or wrong. Even if it's wrong, it's completely okay for this credit. Technological in nature just means that the activities that are being conducted need to relate to the hard sciences, and in this day and age, computer science is considered to be a hard science for purposes of the R&D credit. And there has to be a qualified purpose. So you're creating a new app, you're looking to improve a current app that you have, different processes that you want to improve. So in order for your qualified activities, if it hits that 4-part test, the work must be performed in the US in order to qualify. So if you have employees in Canada or in China doing the R&D activity, that actually would not qualify for the credit. The research cannot be funded. So the company itself that's performing the research and development has to be at risk for the loss if the project were to fail. You would also be retaining the IP, so the rights to that research that you're conducting, that would then qualify.
So for a lot of these companies, if they're in the federal program, the SBIR program, providing grants for R&D, that would be an example of funded research that we can't claim, right?
Yeah, correct. It is really important to make sure that you're looking at the agreements, because depending on how the agreement is worded, it might be something that we can take. So it's always important to just make sure you're looking at that agreement.
And if you are going after funding and you have an accountant, you want to look at the R&D credit, maybe on the front end, you want to have them comment on the wording in that agreement to figure out whether it's funded or non-funded research, so to open the door to that credit.
Correct. So the level of technological advancement does not matter. It doesn't matter if you're creating a revolutionary app that has never been created before, it's brand new to the world, or if you're just improving upon an app that you've already developed and you're adding a new feature or something of that nature. And as I had mentioned before, success is not mandatory. It is okay to fail. It's even better in some cases because we have proof that you did do this process of experimentation. And duplicating what others have done in the past does not qualify. So you can't recreate an application that's already been done. It does have to be something that is new, that has not been done before, so that you have that technical uncertainty essentially. The R&D credit has a lot of misconceptions. I think historically people have thought of R&D as someone in the laboratory with a white lab coat, mixing a bunch of different chemicals together. In today's day and age, computer science is a big, hard science. So we see this credit being very advantageous for a lot of computer software companies. Also, depending on what you're doing and what type of industry you're in, you might have customers that are coming to you and are requesting a specific application or requesting a specific capability, and that can also qualify, even if it's something that your customers are looking for.
So, Kristen, what if I hire a bunch of coders to create some sort of internal app for my back office operations that improves workflow? Would something like that qualify?
So actually, recently with the tax law changes a few years ago, the IRS, because computer science has become so prominent, as an industry for research and development, they have narrowed what's called internal use software down significantly. At this point, generally, if anything interacts with a third party, it's typically not going to be considered internal use software. When you do have internal use software, that's that back office, so an HR function, inventory management function, something of that nature, there's an additional test that that software has to meet in order to qualify for the credit. As long as you pass that additional test, that would also be qualified for the research and development tax credit. There are activities that are not qualified for this credit. So that's typically things related to market research, that those types of studies would not qualify. Anything related to design and more of an aesthetic as opposed to the technical nature of this would not qualify. Research involving social sciences, humanities, like I said, if it's not connected to a hard science or computer science, then it would not qualify for this credit. Also, once an app has reached feasibility, it's no longer eligible for that credit. So the research and development credit is a wage-driven credit. So the majority of the qualified expenses for this credit do come from employees' wages. Typically, you're looking at taxable wages, so that's box 1 on their W-2s. This doesn't only include the developers working directly in the app development. This could include management overseeing those. It also could include contract research expense. So depending on what the contract research expense is for, most generally it's 65%. So if you're outsourcing some to an independent contractor, that could also qualify depending on your agreement with that independent contractor. And another aspect that's very common in the software development industry would be AWS. So AWS that's being used in the software and development research and development activity, that could also be used to take advantage of the credit as well.
Okay, so this just shows how the Excelsior Jobs program benefits work. So this is typically given, this schedule would be given to a company by Empire State Development, that is New York State's economic development arm. And this example shows a company that promised 100 jobs over a 5-year period. And what Empire State Development would do is break down those jobs in a 5-year period, those 100 jobs, and give you benchmarks. So year 1 would be 40 jobs to be created. Year 2 would be 55 jobs, total jobs created, and so forth. And then the total amount of the Excelsior tax credits given would be released according to when those job benchmarks have been reached. So you see in this example, 40 jobs in year 1 would release about $56,000 in tax credits. And then those tax credits are available according to the schedule over a 10-year period. So if the company does not create those 40 jobs in year 1, they only create the 30 jobs, the tax credits are not released until the 40 jobs have been created, and so forth. So like I said, these jobs, this is a Excelsior Jobs program, so therefore the number of jobs and the wages paid are the most important factors in calculating the amount of the tax credit. Capital expenditure is great, but the state is more concerned about new jobs created in New York State, and they have to be net new jobs. So if you currently have employees in the state, it doesn't have to be only in Buffalo, it could be anywhere in New York State. It has to be an increase of jobs over that baseline number that you have in this state. And they must also be direct hires. So if you have any contract workers, those do not qualify towards the Excelsior Jobs program. And in some cases, the state also wants to see that you stay in New York State. So if companies are at risk of leaving to another state and there is proof that there is a flight risk there, the state will come in to help retain those jobs to New York State as well under this program.
So next, we will move on to the second program that we're going to talk about today, and that would be Startup New York. So one thing to note here, you can't technically be part of Startup New York and the Excelsior Jobs program for the same commitment of hiring. If you have two separate projects, you might be able to look at that, but usually it's I want to participate in Startup New York, or I want to participate in the Excelsior Jobs program, depending on what your goals are and what you think what program you think you might fit best with. So I've been dealing with Startup New York since it was originated by New York State. And there has been a lot of information out there in the papers, but within the last few years, I think I've seen a lot of tech companies go into this. So I think this fits perfectly with today's discussion because it is a program that really, really fits well with tech companies. The first slide that we have here is kind of like our targeted business slide with Excelsior Jobs program. We have a list of eligible businesses and then a list of ineligible businesses. Basically, eligible businesses are businesses that move into New York State, graduate from an incubator such as UB has 3 or 4 different incubators around. So if you are a graduate of that incubator, you can move into the program. If you moved out of New York State before June 1st, 2013, which is I think right around the time this program was implemented or being contemplated, and then moved back, you might be able to enter into this program. And then a existing business that goes through some sort of expansion leading to job creation can also enter this, but that is a lot stickier to administer the program with an existing business. That really works well with a company moving to New York State or a brand new startup that is starting from the ground floor. And then under the ineligible businesses, unfortunately, Lumsden McCormick cannot apply to this program. Accounting firms are not allowed into the program. Also, retail, wholesale, restaurants, it's really more geared towards those targeted businesses too. You saw, and specifically tech. So you can read through the list at your leisure. I'm not going to go through all of them. So Startup New York. One of the best things that I think Startup New York has done for New York State is just pure, unadulterated advertising. And people around the country have heard, oh, Startup New York, 10 years tax-free. And I think it's really raised the profile of New York State and Western New York to a place that companies should look at if they're looking to start a business or move to. So 10 years tax-free, what does that mean? For 10 years, the business entity does not pay income tax. So if you're a C corporation, you do not pay New York, and this is important, this is New York State income tax. You may be subject to federal income tax. You may be subject to income tax by other states, but you do not pay New York State income tax at the corporate level if you're a C Corp. If you are an S Corp or a partnership, so the income flows through to your owners, there is a tax credit that is allowed on the owner's tax returns to eliminate any New York State income tax on that income that is sourced to you. Employees receive a benefit. For 10 years, the employees receive a benefit. The first 5 years, 100% of your wages are excluded from New York State income tax. And then for the second 5 years, there are thresholds or cap amounts on the amount of wages, but they're pretty hefty at $200, $250, and $300, depending on your filing status. And to me, this is probably the biggest benefit that I've seen to actual companies. It's not necessarily to their employees, but the companies receive a benefit here because it is a great recruiting tool. So your employees, if you pay them market rate, they're basically taking home 7% more, because that's about the New York State tax rate. And I think it feels good for employees to say, oh, I don't pay any New York State income tax. Again, I've seen it as a very powerful recruiting tool. One thing that we don't have on the slide there as a benefit would be a 10-year sales tax refund of any sales tax that you pay. So it's important to note that I said refund, not exemption. So you pay the sales tax at the point of purchase, and then on a quarterly basis, you provide a copy of that receipt and then proof or certification that you used that item in your Startup New York office, and you can apply for a refund from New York State. And a lot of times, for a startup company that's just starting out, this isn't a big benefit, but once you get to down 3-5 years, a maturing company, they can get a pretty big bang for their buck here.
So thank you, Corey and Kristen. That was just some really great information, a lot of good stuff to take away. And let's see how that information applies to a couple different hypothetical situations. So first off, we have a situation where we have a back office customer service center. It could be inbound, outbound, doesn't really matter. But typically this would be a large call bank. These type of businesses tend to lease space. Let's say in this case, 200,000 square feet. They typically like to be in the suburbs for free parking and so forth. This company projects to create 250 new jobs, and the starting salary would be around $32,000 a year. Capital investment is not big. They're just looking to get some basic FF&E, some furniture, fixtures, and equipment in the space, and just some backup servers and a generator as well, just to make sure that things keep running smoothly. The second situation would be a tech company. Corey and Kristen were talking how Startup New York would be a great program for a tech startup. And in this case, they're coming out of a university incubator space. They project to create 7 new jobs over a 10-year period. Not a big company, but they're well-paying jobs. Starting salary is $75,000 a year. And again, minimal capital expenditure just for their own computer equipment and software.
So one of the questions that we get quite often for either one of these projects is, well, I'm a targeted business and I'm eligible for both programs, the Excelsior Jobs program and Startup New York. Which one should I choose? And I usually answer with, I don't know. I need a lot more information. But if we go back to the larger project first, just to put it up on the screen, generally speaking, if this is a customer service center, one of the things about Startup New York is in your immediate area, and I'm not going to go into the definition of immediate area, you cannot have a competitor and enter into the program for Startup New York. So I'm going to guess there's other customer service centers in the area. So Startup New York is probably a non-starter for you, and Excelsior would be better for you, I would imagine. And you're creating a ton of jobs, and you're going to be paying a ton of salaries. So you're probably going to get a good bang for your buck out of Excelsior. Now, another comment here is I have had projects where they have a decent amount of jobs being created, and I've had those projects give me projections of the number of jobs they're going to create over a 5 to 10 year period, and then ran an analysis for them on what the projected benefit would be with Excelsior, and then also with Startup New York. And interestingly enough, a lot of times that projection shows that the benefit to the company is pretty similar. So just because if you can't go into Startup New York and you have to go into Excelsior, a lot of times financially you did not miss out on much at all. And sometimes the tipping point just is maybe Excelsior is a little easier to administer if you just get one type of tax credit, the jobs tax credit, or sometimes the tipping point is with Startup New York, and one of the requirements to Startup New York is if you enter into it, you have to have some sort of bona fide relationship with a college or a university, and the tech companies a lot of times like to do co-research or R&D with those universities and love being close to the students. So there's just more synergies there. So There's no one size fits all answer, but it is, if you're eligible for both, it's something that you should probably take a look at. And then if we could go to the tech startup slide real quick, we're creating 7 new jobs there. The tech startup and the incubator space, so you're probably already in some sort of a university or college atmosphere. And again, recruiting people for a tech startup, somebody without startup New York, somebody might, well, why do I want to take the risk? What if this thing's out of business in 6 to 9 months, and then I got to go find another job? Well, something that might turn the tipping point there is if they don't have to pay New York State income tax, it might be easier to find someone willing to take a risk on a startup.
One more thing, I know that it's very important to be part of the university's designated Startup New York area. A lot of universities, colleges and universities will have designated areas that are part of the Startup New York program. I think that's part of the requirement, that they have to identify certain parts of their campus or off campus that goes into the program. So that's another key matter. And usually the incubator or the incubators of a university are already in as part of their Startup New York campus plan.
Yep. Yeah, so that's a great point. Startup New York is very address specific. So there can be a limit on what type of facility you're looking at, where Excelsior is not address specific, other than you need to be in New York State and create jobs. Next is a work opportunity tax credit. This is at the federal level, and sometimes you can hear it referred to WOTC. And this is a tax credit that is available for hiring 8 or 9 different targeted employee groups. It could be a veteran, it could be an ex-felon, it could be somebody receiving social assistance, or somebody living in a neighborhood that is designated by the feds as an area that they want to make an investment in and foster employment. So to take advantage of this program, you have to file something with the State Department of Labor within 30 days of the employee start date. And I say something because each state administers the program and it's different per state, but in New York State, it's about a 2-page form. And what I suggest to clients, if they want to take advantage of this and they think their workforce might avail them to take advantage of this tax credit, is you just slip in the 4 or 5-page form where the employee certifies that they're a veteran or something like that, with the employment package, because they sign 1,000 different forms when they start as an employee. And it's just kind of nothing, and then you take that form and you fax it in New York State, and if they agree and everything's in order, they'll send you back a certificate. You give that to your accountant when they do your federal tax return, and then you get a tax credit based on the wages that you pay to that new employee.
One thing that I would note on this is if you were taking advantage of the federal research and development tax credit, the wages that you use towards this credit are not qualified for research and development. So it would just be a matter of seeing where you would get most of the benefit.
You just taught me something.
I think it's an awesome overview from our experts today. Certainly not all encompassing. There are additional opportunities out there, but we've touched on some of the ones that we see more often in economic development.
Just one other comment, we were kind of spitballing, I think, before the presentation actually started. And we do have some tech companies that are interested in this program, I think, today. And 2 little known things I think that are out there, especially in New York State, and it actually goes for a lot of the states, is if you are performing research and development, the tax code in many states kind of looks like R&D is manufacturing. You're not creating a product, but you're creating a software or an app or something like that. So there are a couple of incentives built into the tax code for people, the New York State tax code, for people that are performing R&D. And one of those things is if you actually purchase equipment or items to use in the R&D process. So for this case, you might be purchasing computers or servers that your developers are going to use that are high-powered and sometimes expensive. You don't have to pay sales tax on that if you present the proper documentation. And then also any equipment that you can depreciate and you place in service on your balance sheet, there is a New York State investment tax credit that actually can be refundable if you're in the first 5 years of operations, and that can be anywhere from 7% to 9% of the purchase price, depending on what type of entity you are, a C Corp, an S Corp, or a partnership. So those are two items for tech companies within New York State that are missed quite often.
Great. We're going to let our audience ask some questions, and I'm going to give them a few more minutes to get them into the GoToWebinar control panel there. You can put in your questions. I definitely have a couple for you. So Invest Buffalo Niagara has been in existence for 20 years, and we've helped over 390 businesses over those years expand to the Buffalo Niagara region.
That's awesome.
So how do you get started doing so? Well, you can reach out to us at any time. We work confidentially and free of charge with companies that are interested. We will also connect you to partners like Lumsden McCormick who have expertise in the different areas that you may not. We can identify real estate options. We will walk you through the incentives process. Our business development managers and directors are there every step of the way, from beginning to ribbon cutting and on. And as I mentioned at the beginning of the presentation, we are going to follow up this email with our latest guide to business incentives. We will also give you this presentation. In the meantime, you can go to our website for tools. We have a section for each target industry that we focus on. There are guides and brochures that you can download. You can also sign up for our email list, and we reach out to you and keep you up to date with what's going on in the industry here. So let's go ahead and start with a couple questions. So one of the things you talked about was S Corps and C Corps. Can you go in just a little bit deeper into what the difference is?
So high level, a C Corp is taxed at the entity level, whereas an S Corporation is what's considered a pass-through entity. So what that means is the income or loss is not taxed at the entity level. The S Corp itself would spit out what's called a Schedule K-1, which flows down to the individual, so the shareholder level, and that income would then be taxed at the individual level.
So with a C Corp, if you think IBM stock on the New York State Stock Exchange or something like that, they're paying corporate tax at the corporate level, and then whatever's left over after taxes, they can pay a dividend to their shareholders, which is then taxable. So there's 2 layers of tax. When with the S Corp, like Kristen explained, it's just 1 layer of tax. So a lot of times it can be cheaper tax-wise to be an S Corporation if you can, but then the corporate tax rate was just reduced to 21% at the corporate level. So the difference is actually a little smaller now than it used to be before tax reform.
And would an LLC qualify for any of these programs?
So an LLC is a very interesting type of entity because that has the option to essentially be taxed as any type of entity it wishes, whether it wants to be taxed as a C Corporation, an S Corporation, or a partnership, all of which would still be qualified for the incentives that we spoke about today.
Okay. But if you do nothing, it's a flow-through entity.
Correct.
As a partnership. Yep.
Lori, so some of the questions we've gotten is what happens if I do not meet the job numbers by the scheduled dates?
If you look at that schedule that we talked about before, the state, when they approve your application and they say, okay, you promised to create 100 jobs over a 5-year period, and they say, well, in year 1, we want you, we expect 40 jobs to be created within that first year, and a company does not meet that benchmark, the state will not release the tax credits to the company at that time. It's not until the first benchmark is met that any tax credits will be released to the company to be able to apply to their tax return. And then once they continue to hit their benchmarks, the tax credits will be released and the full 10-year benefit can be taken advantage of.
And how long does the application process take for these incentives?
That's a very good question because it definitely depends. So first off, the state requires what's called a project information worksheet to be completed. And I like to call it a living document because it's not the actual application for incentives. It's a worksheet that allows a project manager with Empire State Development to basically be your advocate and make the case, listen, this is a company that should receive some tax credits. They're creating jobs. They're a great company. It's a great project. This is what they're doing. And they make the argument to basically a review committee. That review committee approves whatever the tax credit they feel should be issued to the company, and then the company is offered an incentive proposal. So really it all depends on how long does it take for a company to complete a project information worksheet. And then from the time that the state has it to the time that an incentive proposal is issued could be between 3 to 4 weeks. And then some other paperwork is required just to finalize an actual application is submitted. So we'll say from start to finish, depending upon how long the project information worksheet is completed, we'll say 4 to 6 weeks.
Okay, we have a few questions, kind of example questions. So my company's software developers and IT staff are overseas, but I need a sales office in the US. Would I qualify for any of these programs?
Depending on how many people that you're going to hire, I might maybe be able to make an argument that your sales office could be a back office if it's answering calls and you get over 25 people. Other than that, it's going to be hard to make that argument.
Okay, what if my business is a small IT company, 15 to 20 employees? Does it still make sense to do Startup New York?
If you're already generating revenue within New York State, no, because your that business line of revenue is never going to be excluded from New York State income tax. I would look at Excelsior if you're going to be able to commit to creating at least 5 jobs.
And one last question. Would the Excelsior program be more beneficial if I own my building and not lease it? Or is there no difference?
It depends on your award. There really is no difference if you're awarded all jobs tax credits. However, if you are an IT company and you're going to own the building, we could possibly look at requesting part of your award is investment tax credits on the depreciable property of 2%. And while that might not increase the total dollar amount of your Excelsior award, it might accelerate the receipt of the cash over the 10-year period to the first 5 years instead of over the 10-year period. So again, that schedule that we looked at, I think it had a total of 1.2 million. The total's not going to change, but we might be able to push some more dollars to the first 5 years on the schedule.
All right, well, if there's any more questions, our presenters' contact information is on the screen and you're welcome to reach out to them. Thank you, Lori, Kristen, and Corey for presenting today. Have a nice day, everyone.